Ever wonder how professional traders make money without using client cash? Let's explore the world of proprietary trading firms. Proprietary trading, or prop trading, happens when a financial firm trades its own money to generate profit rather than earning commissions. Unlike a traditional brokerage that manages money for clients, a prop shop is playing with its own chips. These firms provide the technology and capital, while traders provide the strategy. It is a high-pressure environment focused on repeatable performance. Prop firms are often confused with hedge funds, but the biggest difference is whose money is actually on the line. Because they do not manage outside money, their revenue comes almost entirely from successful market speculation, rather than management fees. Since the firm is risking its own balance sheet, these shops have very strict rules to prevent individual traders from losing too much. Prop trading is a competitive field that demands deep market knowledge. Check back for more finance basics. Educational content, not financial advice.